Eeny, meeny, miny, mo. I want to drink you now, but it's Wednesday. Damn it! We're going to have to show. Well, unfortunately, it's only Wednesday, so we're going to have to go with the coffee. But don't worry. This is a holiday weekend coming up, so we got some catching up to do. We'll be all right. So let's go with the coffee. So anyway, guys, let me say hello and welcome to another daily edition of Stock Market Mutterings, where I always say, I'll take a grope in the murkiness, try to make some sense out of the stock market over there. That's right, I think I've been doing a pretty good job. And provide you guys with some quality trade setups as always. If you need help with your trading, man, make sure you visit the link that's on the screen. Start trading with us live every single day. Ever since I've been in the office, live streaming right here all day. Make sure you click that link and join us. Now I got a lot of stuff I'm going to talk about. First, I want to talk about the dumbest trader in the world. This trader is totally stupid and destined for failure. Now I shouldn't be so critical, right? I shouldn't be so critical because we all get our dumbness on every once in a while. But I can't let them go on any further because if they continue to do this, they're going to be doomed and they're going to lose money. And you know what my job is? Not just to take gropes in the murkiness, but it's to try to save people from being dumb, right? You can't be dumb. My job is I'm like the dumb police. I got to save you from the stupidity. So we're going to talk about that. Also, I'm going to build on something else, which was the check mark pattern. We had the check mark pattern webinar last night. I thought it was good. You guys seem to think it was good. We went over a lot of stuff, and I'm going to go through some variations of that chart pattern as well, because when you're doing a webinar like that for an hour and a few minutes, you don't have time to discuss everything, but we see a couple of different things. And one of the things that we talked about last night was fake outs and shakeouts and how we're trying to look at the big picture. And we had one of those trades where we really had to work today. And if you do that, and this is what I keep talking about, the check mark pattern, if you do that, and you follow the pattern, you follow the process, guys, I'm telling you, this is one of the hottest things that you're going to find when it comes to alpha, when it comes to getting money. The problem is you can't get shaken out. It's so easy to get shaken out. Of course, it's easy to get shaken out on any kind of strategy. But how about we just get to it? Because I'm ready. I'm just standing here yodeling. It's getting later here in the day, so let's just get over here on the webcam. We'll go over this stuff. Think you're going to like it. The dumbest trader we're going to talk about. Expose them because we're doing it from the goodness of our heart. We need to help them. And we're going to talk about these check marks. Give you a few stuff because I see some good stuff lining up for tomorrow. So let's sit down. All right, so we are on the webcam now. Let's get down to business. I'm ready to get down to business. We're going to talk about a couple of things. How about we start out with kind of building on the webinar? I know a lot of you that are watching this went to the webinar last night. We had a good time. We talked about a lot of things. And inside of that time frame, it's hard for me to explain everything about a trading strategy. But I saw a few things I might have left out today. So I kind of wanted to talk about that and why it's important to commit to the process about forecasting what you see and what is realistically likely to happen, okay? And the reason we do that, because one of the main topics last night was how traders have a tendency to cut gains too short. They scalping stuff or they get a bounce and they immediately cut out. And sometimes you got to really work these trades. Now, certainly they can backfire on you, but we're all in this business to make money. And the only way that you're going to get it is by capturing big gains. So I want to talk to you a little bit about that. We were looking at this ZM today, and excuse the chicken scratch over here. It was only like that because I was actually talking about this yesterday, and if it sunk down into a certain few areas, I would be willing to do it. So here's what happened. Once this thing started to drop into the morning, we had a pretty bullish market overall. So if you kind of look at this, one of the things I talked about, if you didn't come to the webinar, I'm just going to give you a really quick synopsis of it. We have a couple of wicks right here coming off of the bottom, this 171 area, 171.30s, and that's support that was late in the day. Now, when you rank levels of support, I would rank this as like okay support. This down here in this area would be better support, and this would be like super good support. So like you're ranking it. Now, what I talked about in the webinar is you can't really go in full size unless you're at the very best super good support. So because everything was bouncing and we started to perk up, I put a small position in here. And we immediately got to move. Now, one of the things I also said last night was that I sell half at high of day, which is what happened here. Now, I was kind of expecting what would be here, and we all kind of expect these certain things, and this is what I really want to focus on about gaining your alpha, getting your edge, getting the money that you're supposed to be getting on these trades, and trying to block out the noise. And what it was is I kind of wanted it to hold the VWAP, but it didn't do that. And it just started to kind of roll over a little bit. And I should kind of back up. My initial intentions of this was to go in at the first support and work it off of this 170 support, which was a little bit more important. That was my original thought. And if it didn't hold 70, then I would just come back and revisit it at 166. So anyway, it comes back down, and I still have my little half a position, and it starts to roll over. Now, a lot of people at this point would just feel very deflated, like, okay, I give up all my gains. And for the short term, yes, you did. You did give up your gains. And sometimes you can be made to look foolish like this by giving back your gains. I get that. And there was a lot of people at the webinar just didn't quite say, well, why didn't you just cut this? Why don't you do this? I'm going to tell you why. Because we're looking at that check mark. So when you're seeing something like this, the theory is you're pulling and then you're coming back up. And when you're coming back up, you're cleaning out all of these big resistances, making new highs. The thing is, on the way down and through this base, you get a lot of false signals. So it kind of looked like it was going to do it right away, but it comes back down. And I said, okay, look, if we hold up off of that 170, I'll add again. So it comes down here. It still holds 170 because remember, when I got in at 170 was my floor. So the way I look at a trade, as long as we're over 170, the trade's still valid. I can still work the trade. So I'm basically working this trade rather than just scalping for pennies. Sometimes scalping's good, but in this case, I felt we didn't need to do that. And then once it gathered its support here at 170, you'll see, it starts to claw its way back up. And I added back into the trade, the half that I sold here, down into this spot. Now, the reason I did that is because it was the time of day, we were approaching lunch, it was still holding up, and normally stocks put in their lows or their highs around that time. And off it goes, and eventually it makes its way back up there. But look at the way that it did it. It was dirty, it was messy, it was back and forth. But the reason I'm showing you this is because yes, I could have took my gains and I could have scalped. That's fine. I can't, I guess you could say it's never a fault for taking a profit. But I'm always looking at the longer scenario here. And the reason I did that webinar was, and the reason we called it a check mark is because it's that tail end of it. We're looking for things to go to high of day and go beyond the high of day. That's where targets are. We're not buying things down in here for 50 cents, 60 cents. Many may disagree, but this is the purpose of using that pattern. And it works well within this market. Now, we used it yesterday with Netflix and today with ZM. And if you also look over here at ZM, I want to continue to watch this for tomorrow because look at the daily chart. Look how this thing is lining up to just click off a little bit more. So really, really good setup here. Now, this brings me to the dumbest trader. Now, I'm not going to call out anyone specific and say this person individually is dumb. I would never do that. I would never pick on anyone. And I'll tell you why. Because I once lived many years as a stupid trader. So it's just bad karma to make fun of someone who gets smoked. Even if you don't like them. You just don't do that. So I'm not going to pick on anyone. I'm going to talk about a group of people of the dumbest trader because we all kind of do this every once in a while. I've been guilty of it. I'm not judging. I'm just simply stating things. And that is one of the dumbest things that you can do is chase stocks, is chase price. The whole fundamental behind the check mark is you're taking the strong stock and letting it come to you where you want it. You want to buy it where people think, okay, I'm out. Where they're selling it into support because they think it's going to start rolling over in some sort of maddening disaster. You're picking it up and you're getting yourself a good price. Because of your good entries, that allowed me to stay into things like ZM today. If I would have chased ZM at high of day, I would have never been on par with it. So like if I'd have bought up here with an original entry of 174.80, I'd have had to hold it the whole day through all of this mess, probably add again, and then it only closed maybe 60 cents above my original entry. It's such a bad spot, and you probably would have stopped out on this red bar here versus being down at the bottom. And when you get stuck, I mean, you know, the market has a tendency to do this all the time. How many times this week have we seen gap ups where things just gap up? So it's like you sitting here right now with this Facebook. I got nothing against Facebook. I actually have a position in this, but it isn't right here. That's for damn sure. It's not right here. I mean, you're buying at 232 in the post market when this thing was sitting here at 223 this morning and then 216 earlier. Like you could have had it yesterday at 216 all damn day, and now you want it at 232. Do you guys see what I'm saying? Now, here's why I say it's dumb. Because there's going to be times like right now specifically where the market's going to reward that behavior, where they're going to reward the stupidity. And this is what I'm going to preach about today, because this is what killed me early on, guys, right here, because I came into trading when this whole .com thing was rolling, right? And I confused luck for skill. I thought I had skill, but had no clue that the market was just helping me. And now you got markets sometimes like they gap up like Monday, they gap up like today, and they start melting, and it gives you this sense of like invincibility, like, oh, chasing is good, and people get into these habits. And like I said, don't get me wrong, they can win on these. Like, you know, these TWLOs and stuff, they start buying these things at high, or NVIDIAs where they just run and they don't stop. You know, they hardly ever stop. They go parabolic like this. And the thing is, in a market like this, you can be rewarded. But over the span, it's all about your body of work. That's what this is about. Because if you want to be a long-term professional trader, you're not going to get rich on 1 trade, 5 trades, 25 trades, 55 trades, 100 trades. You will get rich on thousands. You know, I think probably since I started, I must have made close to 10,000 trades. So I can't just pick 1, 2 here and go, oh yeah, that was a good one. Right? There's a lot. There's been a lot of good ones and a lot of bad ones too. And it's about building the right habits. You want to be disciplined. You want to be patient. You want to build the right habits, because that's what's going to keep you around. That's the dumbest trader. Ones who chase. One who chases and thinks they're freaking studs of how cool they are, and draw a bunch of lines making technical analysis on news events and Fed pumping. I mean, you're just being naive. Don't do that. You got to be patient. Otherwise, you won't last. And none of us are doing this just so we can do it for the next couple of weeks as a hobby. We all want to last, right? Now, some people might go, that Doug, he's stupid. He's the dumb one. He doesn't know what the hell he's talking about. Maybe I don't. Maybe I don't know what I'm talking about. Maybe you guys disagree with me. But I've been here for 22 years. What am I going to do? Something must be working. Anyway, let's move on. So we had a good check mark there, ZM. Don't be dumb and chase, guys. I know this market can FOMO the hell out of you. Even sometimes it makes me mad when I see all these gap ups. I'm like, stop it. And we got employment reports or something coming up here too. So I talked about ZM. I want to keep that one on the list for tomorrow. Speaking of Facebook, I think Facebook here is going to go through a good accumulation momentum cycle. Obviously, it's hella high right now. I mean, it's way high. And in order for me to even be in this possibility of a check mark, I got to get to 228s. I got to get to 228s to 225s to even consider this as a day trade. As I said, I already have a swing position in this that I bought like a week or so back. So, I want to watch it because you just never know. You just never know when there could be some news clip or some sort of, we got trade war things going on now again. We've got the reopening of a country maybe going on again. And you always have the COVID thing hanging over everyone. And you've got all kinds of things coming out. You got Fed minutes that came out today. You've got employment coming up here. You never know. I just think this is in a longer term momentum cycle now. So I will be looking for pullbacks in this name going forward. Where it sits right now, like I said, unless it's 228 or better, I'm not even interested in day trading. It's got to pull back. It's got to come down in here somewhere for me to do that. But it looks like that. The same could be said for this TWLO. TWLO. This is setting up to be a pretty good break. Again, another one that's up a lot. It's not like these things are... We're getting into this point right now, and here's what you're going to start hearing from me. We're in this point now where we've got to be selective about what we're getting, because a couple of weeks ago, the market rolled over a little bit. Last week, the market rolled over a little bit, and it gave us a whole plethora of stocks to work with. It pulled back ZMs, it pulled back DocuS, it Lulu, you know, all those types of stock. Facebook, for example, it gave them 2 to 3 days of solid selling like PAYC to get us better prices, you know? And now they've rallied so much, well, we don't have as much upside potential as we did a couple weeks ago. And this goes out for the new people. I know it's like everybody wants the market to go up every day, and everybody wants the market to be bullish and all that kind of stuff, right? And it's like, as you do this more often, you will learn to love pullbacks. You will learn to love sell-offs and that stuff. That's how you get good prices. Otherwise, if you don't get, like if you guys that just started investing, if you didn't get the correction in February, March and all that, then you'd be overpaying. Who wants to see the market go up every day and continue overpaying for stocks? It's just, trading and investing, sometimes people, the way they look at it is just dumb. That's the dumb thing too. It's like they go into a car lot and the price on a car is 35 grand and they're like, you know what? I'll give you 40 for it. You know, they don't even try to talk them down. They just want to overpay. It's like the only place in the world where people want to overpay. But TWLO. I'm ranting a little bit, but TWLO. And I did talk about the SPY. I still think SPY is headed up to 300. I've been talking about 300 now for like a few weeks. We're within it. We had the sell-off yesterday. It retraced it before the market was open again. You know, barring any unforeseen circumstances, I would imagine that's what you're going to see. Now, I also want to bring up TDOC here. I'm starting to look for a couple of trades that are pushing back here just a little bit. One of those is TDOC, and it's pulled itself here pretty good down in here. It's holding its support level, so maybe this is something we can look at as just a quick panic trade, a panic bounce, just like we did PAYC. Starting to look for some of these that aren't participating, that maybe they'll get some sympathy. I'm not saying that they'll be my favorite trades, but I'm just saying that we're going to start watching and set some alerts for them, see if they can pull down, maybe test this 168, pull a little check mark tomorrow, and start to recover some of this back up in here into the 178s. You know, that could be a good little trade there. We'll keep our eyes on TDOC. I think Roku might be worth a look here as well. It hasn't been my favorite stock in a while. A couple of months ago it was great, but it's not really participated in this rally. But we have support, and last time it was at support here, this 113, it traded back up to 137. There was some cash there. You're basing pretty solid. You know, I don't know if the market's holding this thing up. It's definitely not what it used to be. But if it continues to hold up here, reclaims this 10 moving average, 122-ish, you know, I would look for it too. If you've got over here the span of a couple of days, you've got some holding in the 116. So, for example, we trade down in here a little bit tomorrow, maybe even down in here a little. And maybe it just gets back up to 118, maybe the 119's there. I would look for a trade like that. So I'm just starting to kind of look for maybe some that have pulled back just a little bit here. I would also think maybe taking a look at Netflix. I got a mess on Netflix. Just because it's struggled itself too. It's got up here to the all-time highs. Let me clean up this daily chart for you. It's kind of rounded off here a little bit. Now it's pulling. You know, I think I'd like to see this just come on down to about 439. You've got, sorry for the mess, I'm not even going to draw another line. Today's low was pretty much this other low right here. And this is what we look for. These just sharp snapbacks every day. There's a sharp snapback in here. You know, this one started to pull a little check mark today, but ran out of steam. They weren't interested in it. So it needs to find a spot. But when I'm looking at stocks that have pulled back, stocks that are down in support that aren't already blasted, like TWLO, Facebook, Amazon, where these things are just smashed up against resistance like this. When I'm looking for a little more value, I'm trying to find a few stocks that have a couple of days of fade, just some nice light volume pullbacks that they'll eventually get the money cycle rotated over to them. I'm looking at Netflix to find a bottom here the next day or so off of one of these moving averages and plug out $18 to $20 a day like it normally does. I'm looking for that one. And maybe you can even add this PODD, P-O-D-D. Another one here kind of rolling down into support. Roku. We'll keep those on there. Yeah. Roku, P-O-D-D, PODD, Netflix. A couple of nice pulls right there. Let's see if those set up well. For bullish ones, I think you're going to see another move on TWLO. It's probably going to end up squeaking out 200. And, of course, your usual suspects. Apple, NVIDIA, Shop, Lulu, OKTA. I mean, this OKTA, I don't talk about it much anymore. This, I mean, good. Look at this daily chart, for God's sakes. Look at this. Oh, my. Jeez. This is like a daily check mark. It's like a check mark that never stops. It's going to go into infinity. Unbelievable. And you just look at things like this. If they're going to keep going, and I always get this theory that the market opens up and everybody's like, no, it's going to roll over. If it doesn't roll over in an hour, it just gets bought back up. There are trades within this. We're starting to get to a little bit more scalpish mode here as the market approaches 300. I think it will need adjusted after that. But we'll see what it brings. I'm going to stop it there because I got ranting. I did a lot of talking. I drank some coffee. I hope I'm providing with you some setups. I want you to do me a favor. Subscribe to the channel if you're not already a subscriber. Like the video. Also, if you go down to the subscribe where it says that you're subscribed, if you already are, there's a bell. I didn't know this, but there's a bell. A little bell right next to it. You can click on that. So when I post a video, you'll say, oh, look, Lincoln's got a video up here. I'm going to go watch it because I like the guy. You don't have to say the last part. Just go watch the video. Anyway, guys, thanks for watching. Take care. I'll talk to you guys tomorrow. See you then.